What if I told you that building your own home from the ground up could be one of the fastest ways to build 6 figures of instant equity and avoid paying taxes on those profits? No, you don't need to be a millionaire, and no, you don't need a construction background. You just need the right land, the right loan, and the right plan. And in this video, I'm going to break it all down for you step by step. Hi, I'm Justin Brown, mortgage pro, real estate investor, and I've been doing this a very long time. So here's exactly what you need to know. So most people scroll Zillow all day long hoping to find the perfect house, but here's the truth. By the time that house hits the market, the equity's already gone. You're paying top dollar for properties right now. Even if you get somewhat of a discount, you're not going to have this big spread of equity that you just got into. Any good deals are getting snatched up right away. The builder made their money, the flipper made their money, and you're the one buying at full retail. So here's a better idea. What if you became the builder? In this video, I'm going to show you exactly how to do it. I'll walk you through the best loans to use, how to find land that's actually buildable, what the full construction process looks like, and how to legally sell your home every couple years tax-free. This is how I've helped hundreds of clients build wealth and how you could do the same. So let's get into it. First, let's talk money, because nobody's out here paying for land and construction out of pocket. There are really two main types of loans people use to make this happen. First is going to be the one-time close loans. These are FHA loans, VA loans, or Fannie Mae loans. They all offer this option, and they basically bundle your land, construction, and the final mortgage into one simple loan. So let me explain how each one works in plain terms. So if you're using FHA, here's what that looks like. You're going to need to have at least a 580 credit score, and that gets you in with just 3.5% down payment. But it has to be your primary residence, and you can't be your own builder. The lender's going to require a licensed general contractor that they approve. They're going to ask for your full income documentation, your W-2s, tax returns, the works. So you just got to be prepared for that process. Now, with VA loans, it's pretty similar. You're going to typically need at least a 620 credit score, and the big win here is you could actually do zero down if you're an eligible veteran. So no down payment at all. But again, it's for your primary home only, and you still need a licensed builder or contractor. And yep, full income docs here too. But imagine being able to buy land, build a home, all with no money down. And then if you go conventional, like through Fannie Mae, you're looking at a minimum credit score of 620. That's what Fannie Mae says, but honestly, you might need a much higher score to get approved with low down payment, like a 680 to 700 or above, because anything below that, you're most likely going to need to go the FHA route. But with Fannie Mae, they do require at least a minimum 5% down for a primary home. If it's a second home, they'll allow this, but you need to put 10% down. And if it's an investment property, you could still do this Fannie Mae loan, but plan on 15% down or more. Some lenders might let you be an owner builder, but it's pretty rare. Full income documentation is still required. The good part with going the conventional route is that you could do this for a second home or investment property though. With VA or FHA, you can't, but be prepared to need at least a 700 or higher credit score to qualify for those conventional options if you're trying to do the minimum down payment. So if you got stable income, you could document your income, and you want the lowest rates, and this is a home you're going to live in, then FHA, VA, or conventional are great options. And if you have the stable income, stable job, good credit score, and all that, then Fannie Mae is a great option for second homes or investment properties as well. So what if you're self-employed, or you can't really document your income, or maybe you're just looking to flip the home, or it's only for investment purposes only, and you just don't want to deal with all the headache of income documentation and extra paperwork? Well, that's when you're going to go with the second option, which is going to be a hard money or bridge construction loans. This is where you get more flexibility. It's perfect for investors, flippers, or folks who don't want to mess with W-2s or tax returns. And here's how it breaks down. You're usually putting 25 to 30% down on the land. And after that, the lender might cover up to 100% of your construction costs. But here's the catch. Your total project cost, this is called your loan to cost, the land plus the building costs and all that, it has to stay under about 70 to 80% of the home's future appraised value. So for example, if the total cost of the land and home build is $600,000, but it's going to be worth $1 million when it's done, well, then you're good to go, because the total project is only costing you 60% of the future value. But if the total project's going to cost you, let's say $950,000, and it's going to be worth $1 million when you're done, well, now you're at about 95% of the future value. So you would have to put more money down. Now you could qualify for these loans with a credit score as low as 620, but if you're at 680 or 700 credit, you're going to get way better terms. And here's the best part. There is no income docs needed, like none. But you do need to either have experience yourself or work with a general contractor who knows what they're doing and has their own experience. The lender's going to want to see that. These lenders aren't about to fund your first time DIY project. Also important, these are short-term loans. They're not designed to last. Once the home's built, you're going to need to refinance into a permanent mortgage. Now there's like bridge loan options options. Those are 12 months or less. Some of the hard money options are 12 months or less. And then there's longer term, private lenders and hard money options that might go as long as 3 years. It just depends. But that's just part of the process, is determining what kind of project you're looking for, how long it's going to take, and then finding the right lender to match with your needs. All right, so now that you've got your loan strategy, let's talk land, because you can't just buy a random lot and assume you can build on it. You've got to do your homework. So here's what to look for when you're checking out a lot. First, you want to make sure it's zoned for what you're going to use it for. Is it zoned for residential use? If not, then don't waste your time. Next, are there utilities nearby? We're talking water, sewer, septic, electric, gas. If that stuff's not there, you're looking at serious costs just to make the land usable. Or you're going to have to look at options like septic tanks, water wells, all that fun stuff, or not so fun stuff. Then there's topography. Is the lot flat, or are you dealing with slopes, rocks, trees that need to be cleared? A flat lot is way cheaper to build on. You're going to want to make sure the property has legal access to a public road. You'd be surprised how many lots are landlocked. And finally, permits. You got to call the city or county planning department and ask what permits or reports are going to be needed. Don't skip this step. Now, if you're working with a good contractor, they could help take care of all this and determine all this information for you, but this is all serious stuff that you need to know. And if you're wondering where to even look for land, you could start with Zillow. Just make sure you're using the filter for lots and land. Then there's landwatch.com, land.com, landsearch.com, or even loopnet.com for more commercial or investment style lots. So when you're searching through there, make sure you're looking at the land cost, but then also the cost of making it build ready. That's going to be your real number on what this project's going to cost you. And then next we'll talk about how to get that build number. So once you found a decent piece of land in an area that looks good, you want to start working on verifying that it's buildable. This is where you're going to want to bring in a contractor. Sit down with the licensed GC and get the full cost to build estimate. This should include everything: permits, utilities, materials, labor, contingency, all of it. And you want to make sure it's broken down and itemized line by line. Then just add your land cost to that number and you've got your all-in project budget. Next, you're going to want to run comps. You could pull recent sales of new builds or nicely remodeled homes in the area. You could talk to a local realtor to help pull that data as well to figure out what it's going to be worth once it's all said and done. If your total cost to build is $500,000 and those comps are selling for $625,000, well, you just built $125,000 in equity before you even move in. So let me give you the play-by-play of what the process usually looks like. Step 1, you're going to get pre-approved for your loan. Step 2, you're going to find the piece of land that you want and then get it under contract. During your contract period, you'll have contingencies to do all the rest of the due diligence, which moves you along to step 3, where you're going to want to finalize your construction plans and budget with your builder. And then step 4, submitting your full builder package to the lender. Step 5, the loan closes. And then you move on to step 6, where all the construction begins. Now, with this whole process, you're not just getting handed a pile of cash up front. Lenders pay out in what's called draws. These are payments released in phases: foundation, framing, drywall, etc. Each one gets verified by an inspector before the funds are released and paid to the contractor. So part of the process when you are trying to find a general contractor to run this project or work on this project for you, you do want to make sure that they're okay working with banks and off a draw basis. They're basically not going to be paid until certain parts of the project are done. So then you finish the build, you get your certificate of occupancy, and if you're on a short-term loan, it's time to then refinance that into a permanent mortgage. So, okay, here's where the strategy gets really exciting. If you build the house and you live in it for at least 2 years, and that's at least 2 of the last 5 years. So if you build the house, you move in today, you live there for 2 years, well, then you're going to meet that rule. The IRS gives you a massive break. Under Section 121 of the tax code, you could sell that home and exclude up to $250,000 in profits if you're single, or $500,000 if you're married, tax-free. So picture this: you build a house, get that instant equity up front, it appreciates even more over the next 2 years while you're living in it, you sell it, and pocket 6 figures of profit, no capital gains tax. Then you do it again and again. And you're not just building a place to live, you're building long-term wealth, tax-free, and you can keep leveling up and climbing that property ladder into nicer and nicer properties while you do this. Also, I put together a step-by-step guide for all of this that breaks this down very clearly, and there's some info on how to get that free guide in the caption. Look, I know this all probably sounds like a lot, but that's where having a good, solid team comes in. A lender that can walk you through all the options and find the best fit loan program for you, whether that's FHA, VA, conventional, hard money, or bridge. Getting connected with an agent that specializes in land or who could really focus on finding you land that checks all the boxes. Getting referred to a great contractor that has great references, where you know they have a track record of coming in on time and on budget, and working with banks on programs like this. You could always reach out to us. Our team will help with all this. We'll help you run the numbers and see if the deal makes sense. And you want to make sure you're working with a team that stays involved throughout the entire process to make sure you don't get stuck or sidetracked. This isn't a DIY thing. It's a team play. And we could definitely be part of that team if you're ready to take the next steps. If you want more info, feel free to schedule a free strategy call with our team with the link in the caption below. And this is a great way to build smart, build equity, and build tax-free wealth. Make sure to hit that like and subscribe if you want more content that puts the real in real estate.